to new highs since the August 5th sell-off. Trade Desk is one. Josh, you own that. It is up 26% from the August 5th low.
That's right. This is a name that I still feel is in the process of being discovered. It's a $50 billion market cap, which obviously is not small, but relative to the opportunity, if they truly can build the third platform versus the oligopolists Alphabet and Meta, if this is like the third way that advertisers can get scale, reach hundreds of millions of people, like if that's what's happening here, then in my opinion, the stock has still not fully been discovered yet. So I'm relatively new here. I didn't capture most of that upside that you just described, Scott. I'm up a little bit, but I'm really getting excited about the possibilities.
How about Sweetgreen? That's yours. You're reasonably new there too, up 21% since that day.
Yeah, look, Sweetgreen is a very idiosyncratic story. It's in the QSR group. It's like obviously serving corporate people salads. It's not, revolutionizing the world, but they bought a robotics startup a couple of years ago. They have fully automated a couple of their stores. If you're in New York and watching this, you can go to 15 Penn Plaza and you can see the salad robot pumping out between 200 and 500 salads an hour. This could be a blueprint for an entire industry to mechanize the most expensive part of being in business, which is labor, and deliver people relatively flaw-free orders on a very efficient basis. So it's an interesting story. I don't have a lot of stock here, but I'm learning the story as I go, and I could be adding as time goes on.
Okay, Natera, that's in the QDevo. Again, remind viewers, that's your new ETF focusing on growth, right? Natera is up 20% since August 5th.
Much different than our traditional strategy. I mean, this is a speculative name. It's a diagnostic testing company. They are not profitable, but they're growing at almost a 40% clip. They've topped their earnings estimates the past 21 consecutive quarters. And I think this is a company that will turn to profitability, but just be careful, not one of my usual names.
All right, Samsara, Josh, up 18%. PayPal is up 17%. You got both.
Yeah, look, one of the things that I try to do with the ideas that I bring to the show is I like to hang around near the goal. So I am not scouring the 52-week low list. I'm not looking for companies paying 9% dividends because their share price has been cut in half. I'm looking for companies that have already established themselves as being on the upswing. PayPal's interesting because it's been a really long time since it's been on the 52-week high list. They've had 3 years in the wilderness. They've made a CEO change. The narrative here is shifting. They look like they were Apple's lunch, and now they look like something different. So I have a pretty tight stop. I don't really trust them fully, but the technicals look outstanding. What was the other one? I forgot already.
PayPal.
I did that one.
PayPal.
Samsara, robotics, heavily involved in construction, manufacturing, warehousing. It's an AI play. It's also an industrial. Again, flawless chart. Looks fantastic. Accumulation in on every dip. And I think it's at a 52-week high right now as well.
Walmart obviously had a nice move after its earnings, but MasTech is yours, Bill. Leidos also, and they are each up 8.5%. Since August 5th, Leidos hitting a fresh record high today.
Yeah, both have infrastructure tailwinds. For MasTech, they have a great backlog, and they've been reducing their debt load and returning that to shareholders ultimately. I think that infrastructure tailwind is going to continue to be there for both of these companies. But again, MasTech in particular, they also have clean energy exposure through natural gas. They've made some acquisitions in years prior, and they've now digested that. So I think they're going to be a nice little sail higher. For Leidos, I mean, good aerospace and defense exposure. I mean, if you go through TSA, a lot of the times the equipment they're using is Leidos. So, and they also have exposure in the tech, in the healthcare space. So I like both of these names and think they'll continue on the track they are.